purpose of this presentation is to explain to our U.S. taxpayers what requirements they may have with regard to their foreign financial asset reporting. You'll notice we asked some questions on our checklist, such as, did you own directly or indirectly foreign assets? What was the maximum aggregate balance of these assets? We hope to answer some of the questions you may have regarding this terminology. We're asking these questions because we will need to prepare for you your foreign bank account reporting form, FinCEN 114, and Form 8938, your specified foreign financial assets form for your personal tax return if any of those questions apply. We won't go into too much detail regarding the passive foreign investment companies or foreign corps, because that's really a more suitable conversation to have directly with your advisor. So what is Form FinCEN 114? It's also known as the FBAR. It's an information form that's actually not filed with the IRS. It's filed directly with the Department of Treasury and discloses any foreign financial accounts you may have. This form applies if you're required to file it if you are a U.S. citizen, a U.S. permanent resident or green card holder, a U.S. resident alien, so a non-U.S. person living in the U.S., or if you were a non-resident alien that had more than 183 days of presence in the U.S. And you also had a financial interest in a non-U.S. or foreign accounts with a maximum total exceeding 10,000 U.S. So let's explain these terms. What do we mean by foreign? Simply put, it's a bank account, a securities account held outside of the U.S. So an RBC account, a TD account, these are foreign accounts. What's a financial account? Bank, securities, an insurance policy with a surrender value, a registered plan such as an RSP, a tax-free savings account, a LIRA, RESP, UK ISAs, Australian superannuation. These are financial accounts and should be disclosed on the FinCEN 114 and Form 8938. What does a financial interest mean? It simply means that you either directly or indirectly own the funds in that account. You can also have a reporting requirement if you don't have a financial interest, but you simply have a signing authority over an account for, say, a corporate account that you control with your signature, essentially. Ownership. We're always looking for joint or separate ownership. Joint, obviously, is if you own the account with a parent or a child. There's both your and your child's name on the account. A separate would be your own name. It's important to note that TFSAs, RRSPs are separate accounts. They cannot be joint, regardless of whether you've named a beneficiary. And you are the owner if you're on title or you're the owner of record. Generally, looking at the bank statements or the statements from the account will tell you whether you're titled on it or not. Maximum balance. A maximum balance is simply put the highest balance in the year. For a bank account, that would be the highest daily balance. So you would go through your bank statements. Please ensure you maintain them for your records. Securities accounts, generally the rule of thumb is to go through the monthly statements for your securities account and choosing the highest maximum value. The same for the surrender value of an insurance policy and your RRSPs and other registered accounts. We will then take those accounts and convert at the year-end Canada-US exchange rate if that's what's applicable. The maximum aggregate balance is essentially the total of all the maximum balances as described above. So let's go through an example of a requirement to file. You'll see the total of the foreign accounts in the left-hand column is a various group of accounts between the UK and Canada. There's even a US dollar account in there. We've converted to US dollars at the year-end rate. The total of all of the accounts when added together of their maximum balance is $11,400. You're required to file and required to include all of these accounts, regardless of the fact that not one of them is over 10,000 US. You even include registered or tax deferred accounts and even accounts that are closed in the year must be included. Here's an example of no requirement to file. You've got a Canadian account, an RSP account, a savings account, as we saw previously. There's also a Merrill Lynch account with Canadian securities worth $5,000 US. But there is no requirement to file the FBAR simply because that Merrill Lynch account is based in the US and is not included in the $10,000 calculation, nor is it considered a foreign account, even though it has Canadian assets. Even though you don't have to file the FinCEN 114 or the 8938 in most cases, you must still disclose the fact that you have foreign bank accounts on your tax return. The due date for the FinCEN 114 is April 15th, but there's an automatic extension to October 15th. There is a $10,000 penalty for failure to file if it's non-willful. We have yet to see the IRS assess this penalty on any of our delinquent filers, but of course, it's better to not even have the question or be exposed to the penalty. If you're willful, there's a much higher penalty. And it's important to note that this form has a 6-year statute of limitations, whether you file it or not. So you should maintain your records to prove your account balances and accounts until 6 years is up. Finally, just as another comment, Form 8938, and we only have one slide here regarding 8938 because it reports very similar information as the FBAR, except that it's included in your 1040 tax return. It has a higher reporting threshold as compared to the FinCEN 114, depending on your filing status and also depending on whether you live within or outside of the United States. It also includes additional assets in the calculation, such as stock certificates held outside of a brokerage account, in other words, held in a safe, private foreign corporation or partnership units that might not be listed, foreign pension plans such as a defined benefit plan, or annuities you may hold. We therefore require you to complete our foreign asset reporting form, regardless of whether you actually prepare your FBAR yourself or not, because there are additional assets that are considered for Form 8938. So what's next? If you have more questions, well, first and foremost, you should determine your requirement based on this presentation to report your foreign assets. You can review our next video on how to complete our foreign asset reporting checklist. You can also connect with our team with any questions, but you should download our 2020 FBAR worksheet from our step-by-step client guide webpage. Again, if you have questions, please email Client Experience and they will either redirect your call or answer your questions directly.